Hello, my name is Justin Urquhart Stewart, and welcome back, or if you haven't been here before, you're very welcome. This is my sort of weekly ramble of items I think we ought to take notice of in what's happening in the markets. Now, I think what's particularly interesting at the moment, of course, is other than all the elements in terms of political changes and things like that, actually what are the primary drivers here, and how do we select what we can be investing in? Now, we know there's going to be a lot more volatility because we've got all the political issues with the Chinese Cold War, sometimes turning a bit warm and hot, if you include what's happening in India, maybe in the East China Sea as well. Then you've got the markets reacting to government initiatives of all governments, putting extra money in, and that makes them boost up. And then, of course, pandemic outbreaks, subsequent outbreaks, which push it down again. So lots and lots of volatility. Right, leave that to one side. Now we've got to try and focus on things. What are the areas we need to look at? Well, we're going to have to try and find businesses which are going to try and increase their productivity and greater efficiency. Those that are actually going to be benefiting from getting government support, and also those which are actually going to benefit from global trade confidence as it starts to improve. So where do I look? Well, let's go back to the old tech stocks as ever. People get very excited over these and often overexcited. But be careful. If I look at your domestic markets in the US, we've now got US tech stocks are probably on a price to earnings ratio about 24, which puts us into the days of the dot-com territory back in 1999, 2000. Those are old enough to remember that. Well, that's of concern, and you can hear some of the asset managers saying, actually, we need to have a reality check on earnings growth. Are they going to sustain those in the future? Now, the obvious companies you look at here are Apple and Amazon. We know all about that. We need to be more imaginative than that. So what are we looking for? We're looking for companies and sectors where they've got good cash flows and with the opportunity and chances of being able to increase those revenues. So cash flow and revenues. They'll be needing capital at some stage because we're in this about recapitalization, further capitalization, and that can provide opportunities for us as investors. So where are we looking at here? Well, you're going to be finding those which are actually going to be requiring businesses that are going to be requiring greater elements of things like medical care, robotics, all of those sort of areas. And also where you're going to be getting demand from government agencies and pretty interesting things like military and university laboratories. There's a whole series of elements where you could see the money coming from and what it's going to be used for. So money from governments, money from companies who can see that they're going to have further technology. Now, the reason I highlight all of this is that these individual companies, they're not going to pick out individual ones for you. What you can do, though, is use this as a selecting mechanism. So if you've got companies coming through which have got that technology tag, why? Because technology itself will just add more to the value. There's a very name involved in it. But two, actually making sure that they have positive cash flow, they're driving that through, and the increased opportunity through greater demand, greater productivity, or you can see where the investment money is coming from, or the customer money is coming from, and quite a lot of that is going to be governed by government expenditure. Now, all governments, we're going to be, particularly in our little island over here in Britain, we're going to hear news now about greater infrastructure coming through. It's not the infrastructure itself I'm interested in, it's the providers of the facilities to that, i.e. money going in. Companies, therefore, trying to make sure they're technologically more advanced, follow the money, follow the cash. So when you're going through this, it's then going to throw up a list of businesses of various sizes and things like that, and hopefully which are listed so we can invest in them, which will be looking for further investment money. And so those are the ones we should be taking account of. Start drawing up a list of those. There is no reason to rush to buy them. Why? Because of a PE at 24, it's expensive. Mind you, expensive things does not mean that they're bad. And if you're willing to take a longer term view, that's okay. I'm not for punting. That's why you have horse racing. Buying good quality for longer term, but use this as a better sieve. So I hope that helps for you. Good luck and stay well. Goodbye.